This is Bazaar Morning Call. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Start of a new week, Monday morning. We are coming to you as always from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me as always, my colleague Sonia and Nigel. Guys, good morning.
Hi, good morning, Prashant. Good morning, Nigel. And it's been great going for the market. The start of a brand new week. Lots to look forward to. So let's get rolling.
Well, that's right. And an eye on the cricket match as well. India in the first half of trade, so to call it. We may get home in that test match against England. Big comeback yesterday. People were ruling us out on Saturday night. So I'm pumped about that. But I think we need to track the markets.
Absolutely. And, it's going to be a okay-ish kind of start, I think, because we left off on that kind of a note on Friday. Both here in India, where the market sort of actually gave up some of the gains. We ended about 0.25% lower. And, of course, in the US as well. So let's just quickly start there, right? I mean, just a word on how we left off on Friday. So things cooled off. It was a good sort of week. The index, for example, was up about 0.75% Friday to Friday. Mid-caps were higher, small caps not so much. Banks, one half was good, the other half not so much. So, but broadly, I mean, if you just gauge things by what the Nifty did, it was up about 0.75% or so. But on Friday, it was a bit of a cool-off, which we saw. US has not really thrown us anything big. S&P is flat. The Nasdaq is down about 0.25% or so. But big move in yields. And I think this is just profit booking, nothing else. I mean, the yields cooled off about 7 basis points to 4.25%. There was no big data at all. I mean, earlier in the week, you had the CPI number, the PPI number, you had, jobless claims, etc. But on Friday, there was nothing. But markets, I think, saw some profit booking on the rate side. The Fed rhetoric, and this is, of course, going to dominate, it continues to indicate that it will take an unhurried approach to cutting rates. I mean, there's no immediacy to do anything because, labor market data, especially labor market data, is coming in pretty strong, right? So the low jobless claims, which we got last week, suggest that you've got a pretty healthy labor market still. There are many who argue that other data points are slowing down. It's a matter of time before this one data point, the labor data, starts to show up as well, starts to slow down as well, but it needs to. Now, this week, we get the PCE number, the January PCE number, which is the most important inflation gauge, which the Fed watches. There is a CPI, but there is the PCE number, which we get as well. And because the CPI and the producer price index, etc., has been strong, expectations are that this is also going to be elevated. It's going to be firm. Now, oil prices sold off about 2.5% on Friday. We are at about 81.5, so that's good news. It kind of leaves us in no real sort of big directional cue, so as to speak. So the market here in India has largely negated any sort of one-day shakeouts, etc., like what we saw last week, right? Wednesday, we got a big shakeout, and then the market just moved on. So the targets remain 22,500 on the upside. And what has worked basically is to try and buy the dips whenever they appear. And it's even better if you try and buy near support levels. So, for example, last Thursday's low is 21,875. That's the low for the week. And I would imagine that that's the first kind of support which the market will, if you're trading, I think that should be the stop that you need to place. 21,875 is that number. Nifty Bank is still below its previous high of 47,363. Supports there come in at 46,270, which is the 40-day exponential moving average, and then 46,011, which is the 20-day moving average this morning. I think the GIFT Nifty is indicating a flattish kind of a start, so no real fireworks at all. I mean, 6 points lower, but a slightly bigger sort of dip at some point during the session gives opportunity to get in because you get those rebounds inevitably as well. Sonia.
Absolutely. I think we got our fair share of the fireworks last week, right? When the Nifty hit record highs for 5 consecutive days. So looks like that's something that could continue over the course of the next few days as well. Now, one thing is clear that this is a buy on dips market. And that's the strategy that's been working for a while. So it looks like it could continue today as well. There was large buying from foreign investors. And this is unusual because through the course of February, you've got buying from domestic investors. The FIs have not come back in a big way. But on Friday, the foreign investors came back almost 1,270 crores of buying from FIIs, and the domestic community has been pumping in money thick and fast. So DIIs have bought almost 21,000 crores in the cash markets in February so far. So that's been looking pretty good. As I said, the buy and dip strategy is something that's working, so I'll keep an eye out on that. In fact, in spaces like PSU banks, for example, names like SBI, a couple of other PSU banks, Motilal Oswal has come out with an interesting note this morning where they reiterate their buy on names like SBI despite the rally that we've already seen. So if you're looking to buy the dips, perhaps some of these spaces like PSU banks should draw your attention again. A couple of things to watch out for. There is some data that we're looking out for. Prashant mentioned some of it. But in the Indian market, on the 29th of February, you have the fiscal deficit data, the GDP data, the core sector data that's expected this week. So all eyes will be on that. And in terms of individual stocks on the downside, I'm watching out for Asian Paints because remember last week when Grasim announced their paints business, Asian Paints was under pressure. Brokerage downgrades continue over there. In fact, this morning, CLSA has downgraded Asian Paints to a sell. They've cut their target price to 24.25, which is a big downside to the current market price. So keep an eye out on those stocks. But looks like the going is good and the buy on dip strategy continues.
Well, that's right. The buy on dip strategy should continue, Sonia. And what a series it's been, right?
Yeah.
And this week we're going to be having expiry that plays out. So it's going to be quite interesting. Let's tell you what the FIs did, though, in Friday's trading session. They lighted some positions, both on the long as well as the short side. They continue to remain net short with the positioning at around 56% odd. The PCR, though, that's come down closer to around 1. Remember, it had moved to around 1.2. That's telling you the kind of call writing that we're seeing. That was quite aggressive. So the 22,300 call, the 22,500 call. Between them, they added more than 55 lakh shares odd. So there was aggressive writing being seen at both those two strikes, telling you that the bears believe that they can defend this particular range. That's what they believe. And they've been wrong numerous times in the series. So let's see whether they get caught on the wrong side. Well, the Nifty, actually, the chart should come up for you. And if you look at a reference point on the downside, the 20 DMA, that's the one, that's the first one at around 21,880 approximately. So that's crucial. Going by the options data, going by the technicals, you'll see the near-term support is at this 20 DMA, or you look at it at around 22,000 odd mark, since it's a rounded off number. While on the upside, the bears believe that they've got this covered, at around this 22,350 to around 22,500 going by the options data. The Nifty Bank, that's pulled back well, but that seems to be facing some resistance in this vicinity of around 47,100 to around 47,500. And I say this because the last few trading sessions, it's going to that mark, but it's not able to decisively conquer that. So you'll want it to see, the Nifty Bank go ahead and conquer that 47,500 odd mark. The GIFT Nifty is more or less flattish to kickstart trade, so it gives you a good entry opportunity if in fact you do see a bit of a dip. The stock that I'm looking at is Biocon. Last week, it was a bit of an underperformer. It showed signs that it wanted to run away to around that, close to around that 300 rupee odd mark. But in the last week, it went closer to that mark. And in fact, it came down lower as well. So it's corrected closer to 7% from the recent peak. But if you plot the lines, you look at it, it's coming towards the 20 as well as the 200 DMA, which is in that vicinity of around 250 to around 270. So, it should hold on to this level. The chart's looking quite interesting. If it can hold this level, let's see whether or not it can bounce back. But I'll keep an eye out on this stock. On the charts, it's looking quite interesting. Let's see how it goes. Expiry week, the bulls will feel they're in control.
All right, it's a big expiry week. The markets are at record highs. In fact, most global markets also are at record highs. As we speak, the Japanese market continues to be at fresh highs. So there's lots to watch out for as we begin a brand new week of trade. But as we kick it off, let's get you some opinion from Saion Mukherjee of Nomura. A little bit of cautiousness in his tone. He says the positive narrative of the macros and earnings is largely priced in, and hence they are selective across sectors. They have replaced IndusInd Bank with SBI in their portfolio, given the prevailing tight liquidity conditions and valuations. They've also assumed coverage on industrials, where ABB is the preferred pick. Gujarat Gas and Gland Pharma are added as the least preferred names, and Zomato has been removed from this list given the recent change in the stance and stock valuations. Nomura's top large-cap picks include SBI, ICICI Bank, M&M, Reliance and L&T. From the mid-caps, top picks are Lupin, MedPlus, Fortis, Sansera, Dalmia Bharat, Federal Bank, Voltas and 5-Star.
All right, let's get you some money market views. P. Prasanna of ICICI Bank says the dollar consolidated gains as rate cut pricing gets pushed back due to strong economic data. He says rupee performed better than its peers on the back of debt inflows and narrowing current account deficit. However, he adds RBI's intervention mopped up the dollar, which kept the rupee in a narrow range. He's expecting the rupee to continue to trade between 82.75 to 83.15 for the week.
All right, and on the bonds, V. Prasanna says as early rate cut expectations keep diminishing, global yields continue their hardening bias, albeit with some emergence of value buying. Back home, he says yields remain supported owing to strong investor and FPI buying. He says absence of GSEC supply and lower SDL borrowing than scheduled augurs well as year-end demand is likely to continue. He expects range-bound movement with the 10-year benchmark bond yield likely to trade in a range of 7.02 to 7.12%.